So you want to start a business, but you don't want to do it alone. Maybe you want to get involved with a significant other or a friend or a shark from Shark Tank. You see, whenever you start a business with multiple owners or members, it defaults to a partnership. Now contrast that with a sole proprietorship or a single member LLC where there's only one owner. And partnerships are interesting because they are pass-through entities. Pass-through meaning that the tax burden actually passes through the business and on to its owners. And since it's an entity, it requires its own tax filing. Now, let's say, for example, you and I create a partnership right now, and business is good. We have revenue of $100,000, maybe expenses of $70,000, so the company nets $30,000. Now, again, this is a partnership, so that $30,000 is not going to be taxed at the partnership level. It's going to trickle down to us as its owners slash members. So the partnership is going to file a tax return called a 1065. Think of it like a 1040, like you do for your individual taxes. Now, that $30,000 in net is going to be trickling down to us through use of a K1. A K1 is a form, think of it like a W-2 or a 1099. So that portion of that $30,000 that we're going to take on is going to show up on our individual tax returns. Now, as a partnership, you can have them allocated however way, but let's say we're a 50-50. Doesn't always have to be. It could be 30-70, 70-30, 90-10, whatever. But we'll just say it's 50-50. So I'm going to report $15,000 of the $30,000 on my tax return, and you're going to report the other $15,000 on your tax return. Now here's where it gets crazy. Now on my personal tax return, I got to report my share of the $30,000, aka the $15,000. You're going to report your $15,000 on your personal tax return. But here's the thing: when it comes to the actual tax impact, the tax burden, our $15,000 may not be treated equal. If you're in a higher tax bracket than I am, you're going to be paying more tax on your $15,000 than my $15,000 that I'm going to pay on mine. So there may be a disconnect between who actually gets the tax burden when the distributions are made. So in summary, no, partnerships do not pay taxes. That potential tax burden, that net income, actually trickles down to its owners. But also keep in mind that partnerships have to require a completely separate tax return in addition to your personal tax return. So if you are looking to set up the partnership and you do your taxes either through TurboTax or H&R Block, or you have an accountant do it, just keep in mind that usually they charge a premium when it comes to partnership tax returns because there's a lot more involved with them, it takes more time, and well, yeah, there's going to be more cost to it.